Hi there. I've been trying to get my head wrapped around Bitcoin. There have been astronomical increases in the price of Bitcoins. I've been wondering, should I invest and what does it mean to own a virtual currency? How could a Bitcoin be worth 10 times as much as it was a few months ago? Is it like a stock? Does it have intrinsic value? Will it eventually reach 100K or $1 million or $10 million per coin? So when I dispensed with some of the hype, it actually became a lot easier to understand. So what I'm going to try to do is simplify it so you too can get your head wrapped around it. First, let's look at a few terms. Blockchain, cryptocurrency, decentralized currency, Bitcoin mining, the backstory. The blockchain is a new and quite likely disruptive technology for tracking transactions. Like many economists have stated, it has the potential to revolutionize aspects of the banking system. It's a beautiful solution to a complex problem. The next term is cryptocurrency, which has two aspects. One, it's a virtual currency that can be used to buy and sell products. The second is the appearance of anonymity. Another term is Bitcoin mining. It's a process where the system rewards those who upkeep the transaction infrastructure by providing them with free Bitcoins. Bitcoin has a great backstory. Satoshi Nakamoto, it's a pseudonym, created the coin single-handedly. It's a rags to riches story of something that sold for pennies and is now selling for five figures. So as I was trying to wrap my head around it, I decided I have to simplify and remove the superfluous information and then compare it to better known commodities. First of all, the blockchain is irrelevant to me. If I'm buying or selling a commodity, share, stock, or object, it really doesn't matter to me how the transaction is registered. For example, if a Bitcoin, instead of working through a blockchain, if they were to take all the Bitcoins and register them as a stock with 21 million outstanding shares, and each coin is a share, it would only make it easier for me to buy and sell it. There's no digital wallet, probably lower transaction fees, um, less likely to lose my money because I lost the password. It'd be far more regulated, less like open to price manipulations. Second term is mining. It's interesting, but it's also not relevant to me. The currency gets inflated from time to time. We're used to it. It doesn't have a significant impact on the supply or demand, so it's also filtered out of the equation. Third is the cryptocurrency. It sounds really great. You can transact anonymously. There's no regulation. In theory, lower transaction fees. But again, those factors are not relevant, at least not to me. I'm not buying the things illegally. I'm not hiding my assets from my spouse or the IRS. I'm not laundering money. I'm not collecting ransoms. So the anonymity, or rather the appearance of anonymity, is not particularly attractive trait. If we're talking about currencies, it's not a currency. Nobody's buying or selling goods and services for Bitcoins. All sellers are doing is using it as a medium to transfer money. They look at the price they want, calculate it in Bitcoins, transfer the Bitcoins, and then they exchange the Bitcoins for the currency they actually wanted. For example, if I sold you a car for $10,000 and said you could pay in Bitcoin, I would look up the current price of Bitcoin, calculate how much you need to pay in Bitcoins. You'd transfer the Bitcoin and I'd exchange that for, I'd exchange what I received for the dollars that I want, unless I intended to buy Bitcoins with that money. Similarly, I could sell you a car in units of Google stocks. You could transfer 9 or so Google stocks to my account and I could choose to keep them or sell them. And the same thing applies to anything that you can transfer and I can sell. Using Bitcoins is a bit risky for the seller because there's a lot of volatility in the price. So if you transfer the sum and it went down by 5%, I would actually have to eat that loss. The backstory is also beautiful and entertaining, and if the personification of Bitcoin were on a reality TV show, I bet the production staff would make sure to keep it till the last episode. But as an investor, it really doesn't matter to me what the backstory is. So now that we've dispensed with some of the buzzwords, which have served to cloud the way we look at Bitcoin, we can now do a comparison with other financial devices we know better. So the first comparison I will do to a stock. Like a stock, Bitcoin can be bought and sold. Its price can appreciate, it can depreciate. There are limited amount of stocks that can be issued. There are many stocks out there which have approximately 21 million shares. The value of stock is largely dependent on estimation of future value. So people who buy Bitcoins are interested in it because they believe it might eventually be worth a lot more. If Bitcoin were a stock, it would have 21 million shares outstanding. And if we were looking into it beyond the hype, we'd look according to the general parameters that stocks are evaluated. Its quarterly and yearly earnings per share, EPS, which would be zero. Its dividend yield, which would be zero. Its PE, which would be undefined, and its beta would be in the hundreds. Its book value would be zero. Now, there are many companies that do not make profits, but their stocks are still valued. For example, Tesla Motors lost several dollars per share, and their share trades for hundreds of dollars because people believe that eventually the company will make a profit. But there are some things that is not similar to a stock. So Bitcoin provides some anonymity, unlike a brokerage account, which can be tracked. In theory, one can hold and trade Bitcoin without exposing their gains or losses to others. Another difference is there's absolutely no potential earnings possible for this stock. There's no book value whereby if the price goes down, at least something can be salvaged. Bitcoin is not regulated as stocks, so it's subject to price manipulations. Jim Rickards describes how traders can ramp the prices by exchanging coins between themselves for successfully larger sums. The Journal of Monetary Economics published an article that evaluated price manipulations of Bitcoins, which caused the price to more than double. So let's compare it. Maybe it's not like a stock market, it's more like a Ponzi scheme. In a Ponzi scheme, those who profit are those who take their money out before the collapse. Similarly, in every Bitcoin transaction, there's a buyer and a seller. Someone who is taking the dollars and putting it in, and someone who is removing dollars from the system. The total value of the system remains constant at zero. Now that the price has gone up, it is conceivable that every person with Bitcoins could retrieve their money by selling a percentage of their holdings. But those who would be buying would also be putting money in. As long as the price is increasing, each successful purchaser can recuperate his investment by selling it to other newcomers. But if the price stalls or goes down or becomes less interesting to newcomers, everyone who entered at a higher price or late in the game will find themselves losing. But unlike a Ponzi scheme, the system is transparent. It is clear that there is absolutely no value. So on some level, everybody knows that their Bitcoins are worthless. The hope for those holding on to the coin is that enough new money will continue to flow in that they'll be able to time exactly when to get out. So to summarize, I don't think that Bitcoin is a worthwhile investment. I think speculating about something that is so subject to price manipulations, unless you're one of the price manipulators, is worthwhile. I don't think that these so-called benefits of Bitcoin, the anonymity, the the currency, calling it a currency, make it worthwhile. I believe that you should steer away from this. And if you have put in money, at least take out the money you put in, so you won't risk leaving there with a loss. Okay, thank you very much. Bye.